taxes, not always the most exciting thing to talk about. But we're going to do it anyway, because there are some pretty big changes coming up for both tax years, 2024 and 2025. And we want to make sure that everybody's prepared.
These changes can really affect your tax liabilities, so it's good to be in the know.
Yeah, absolutely. Let's start with something everybody is familiar with, the standard deduction. That's getting a boost in 2024. Good news for a lot of taxpayers, I'm sure.
It's a significant increase, actually. For single filers and married people filing separately, it's going all the way up to $14,600. That's $750 more than last year.
Wow, that's quite a jump. What about married couples filing jointly?
Even bigger. A $1,500 increase, bringing it to $29,200. And heads of households, they get a bump too, $1,100 more, for a total of $21,900.
So potentially some nice tax savings there for folks who don't have a lot of itemized deductions.
Right. The standard deduction really simplifies things for a lot of people. And these increases, well, they could mean a lower tax bill. But of course, it's always smart to compare. See if itemizing makes more sense for your situation.
Good point. Let's move on to tax brackets now. Still 7 brackets for 2024, but the income thresholds have been tweaked a bit. Could you walk us through some of the key changes there, particularly for those in the higher income brackets?
Of course. The highest bracket, that's the 37% one, now applies to single filers making for $609,350. And for married couples filing jointly, it kicks in when their income goes above $731,200. So those thresholds have moved up a bit compared to last year.
Okay, so anyone earning more than those amounts, they'll be in that top bracket. How about the other brackets? How have their income ranges shifted?
The 35% bracket now starts at $243,725 for single filers and $487,450 for joint filers. And then the 32% bracket, that begins at $191,950 and $383,900 respectively.
Okay, so those top 3 brackets, they cover a good chunk of higher earners. What about the brackets for those with more moderate income?
Well, a 24% bracket, that one applies to incomes above $100,525 for singles and $201,050 for joint filers. The 22% bracket, that kicks in for those making more than $47,150 or $94,300 for joint filers.
Got it. And then, of course, we have the 2 lowest brackets, the ones for lower income earners. Can you remind us about those thresholds?
Sure. The 12% bracket covers incomes over $11,600 for single filers and $23,200 for joint filers. And lastly, the 10% bracket applies to incomes of $11,600 or less for singles and $23,200 or less for joint filers.
So it looks like all those income thresholds have been adjusted upwards, I guess reflecting inflation and other economic factors.
That's right. These adjustments are important for keeping things fair in the tax system and preventing people from being pushed into higher tax brackets just because of inflation.
Absolutely makes sense. All right, let's tackle a topic that can be a little tricky, the alternative minimum tax, or AMT for short. Now, this is designed to ensure that high-income taxpayers are paying at least a minimum level of tax, even if they have a lot of deductions.
Exactly. The AMT is there to prevent those high earners from using deductions and credits to drastically lower their tax liability.
So who exactly is affected by the AMT? Is it something most taxpayers need to worry about?
Actually, very few taxpayers end up paying the AMT. For example, in 2023, less than 180,000 taxpayers out of over 153 million actually paid it. So it mainly affects those with very high incomes who are taking advantage of certain deductions and credits.
So for the average person, it's probably not a huge concern. But for those who do fall under it, I imagine it can get pretty complicated.
It can be complex, yes. But it's worth noting that the exemption amounts, which help shield taxpayers from the AMT, those have been increased for 2024.
Okay, what are those new exemption amounts? And how might they affect those who could potentially be subject to the AMT?
For single filers, the AMT exemption is now $85,700. And for married couples filing jointly, it's $133,300, both higher than in 2023. So that should offer some relief.
Definitely good news for anyone who might be facing the AMT. Helps to ease that tax burden a bit.
Exactly. The higher exemptions provide some protection against those AMT complexities and the potential tax liability that comes with it.
All right, let's switch gears now and talk about health savings accounts, or HSAs. They're a pretty popular option for managing healthcare costs these days.
HSAs are a great tool. For those who are eligible, you get a triple tax advantage. Contributions are tax deductible, the money grows tax-free, and withdrawals for qualifiers are tax-free too.
Yeah, the triple tax advantage definitely sounds appealing.
Yeah.
So what about the contribution limit increases for HSAs in 2024? Any changes there, particularly for employees?
There is an increase. The limit for employees has gone up to $3,200 for 2024, so people can put more away in their HSAs and potentially get even more tax benefits.
Interesting. Now, are there any adjustments to the out-of-pocket expense limits? For medical savings accounts, I mean.
Yes, for 2024, the maximum out-of-pocket for self-only coverage is $5,550. That's up $250 from last year. And for family coverage, it's $10,200, an increase of $550 from 2023.
Okay, so those adjustments to HSA contribution limits and out-of-pocket expense limits, I'm sure that's welcome news for folks who use those accounts to manage their healthcare costs.
It definitely gives individuals and families more flexibility and the potential for some real savings when it comes to healthcare, more flexibility and, potential savings.
All right, so let's shift gears a bit and look ahead to tax year 2025. What can taxpayers expect? What are some of the key changes coming down the pipeline?
Well, in 2025, we'll see some more adjustments. The standard deduction, for example, it's going up again.
Oh, that's good news. More relief for taxpayers. What are the new amounts for each filing status?
Okay, so in 2025, single filers and married individuals filing separately, their standard deduction goes up to $15,000. Married couples filing jointly, they'll have a standard deduction of $30,000. And for heads of households, it'll be $22,500.
Wow, pretty substantial increases all around.
Yeah.
So what about the tax brackets themselves? Any major changes happening there in 2025?
Yes, there will be. The top bracket, that 37% one, it'll apply to single filers making over $626,350. And for married couples filing jointly, it'll start at $751,600.
Okay, so a little bit of a shift upwards there compared to 2024. It makes sense. What about the income ranges for the other brackets? How are those looking?
The 35% bracket, that'll begin at $250,525 for single filers and $501,050 for joint filers. The 32% bracket, that'll start at $197,300 for single filers and $394,600 for those filing jointly.
All right, and for those in the lower brackets, what are the income thresholds they should keep in mind for 2025?
The 24% bracket, that'll cover incomes above $103,350 for singles and $206,700 for joint filers. Then the 22% bracket, that'll apply to those earning more than $48,425 for single filers and $23,850 for joint filers. And the 10% bracket, that'll cover incomes of $11,925 or less for singles and $23,850 or less for joint filers.
So it seems like there's a pattern here. Slightly higher income thresholds across all the brackets for 2025. I guess the tax system is trying to keep up with inflation.
That's right. These adjustments are meant to keep things fair and prevent what's called bracket creep, where people end up in higher tax brackets, not because they're actually making more money, but just because of inflation eating away at their purchasing power.
Right, that makes sense. Now, speaking of keeping things fair, the standard deduction plays a big role in that. It really simplifies things for a lot of taxpayers. Can you remind us why it's so important?
The standard deduction, it's there to make filing easier, especially for those who don't have a lot of itemized deductions. It's basically a set amount that you can subtract from your taxable income, and that can lower your tax bill.
Right, it's like a built-in tax break for a lot of people. Makes filing simpler and potentially saves them some money. But of course, it's always good to remember that itemizing deductions might make more sense for some.
Absolutely. It's important to compare. See which option gives you the lowest tax liability. Sometimes it's worth talking to a tax professional to get personalized advice.
Good point. Now, we talked earlier about the AMT, and you mentioned that statistically, very few people actually end up paying it. Why is that? And is there any concern about how complicated it is?
Well, the AMT is mainly aimed at high-income earners, but because of the exemption amounts and the phase-out thresholds, a lot of taxpayers are shielded from it. But even if you don't owe AMT, you still have to calculate your taxes under both systems, the regular one and the AMT system, which can be a headache.
So it sounds like even though the AMT is meant to ensure fairness, the way it's structured and calculated can add a lot of unnecessary complexity for a lot of people, even those who don't end up owing it.
Yeah, there are definitely concerns about its complexity. But the fact that the exemption amounts are higher for 2024 and that they keep getting adjusted, it seems like they're trying to minimize the number of people affected.
Hopefully that's the case. Now let's circle back to HSAs. We talked about that triple tax advantage. Can you break that down a bit more? How does it actually work in practice? Especially for someone who might be thinking about using an HSA.
Okay, so first, your HSA contributions are tax deductible, meaning they lower your taxable income. Then the money in your HSA, it grows tax-free, so any interest or investment earnings you get, you don't have to pay taxes on those. And finally, when you take money out of your HSA to pay for qualified medical expenses, those withdrawals are tax-free too.
So it's like a triple win. You get a tax break on the money you put in, your savings grow tax-free, and you can take money out tax-free for medical expenses. Sounds like a pretty sweet deal for those who qualify.
It is a good deal. HSAs can be a very effective way to manage healthcare costs, especially if you have a high deductible health plan.
Definitely something to consider. Now let's move on to another important topic, the Earned Income Tax Credit, or EITC. This is a really valuable credit for low to moderate income workers and families.
It is. The EITC is a refundable tax credit, so it can actually reduce your tax liability to zero, and you might even get a refund. It's meant to help low-income workers make ends meet by supplementing their earnings.
And in 2025, there's a significant increase in the maximum EITC amount for taxpayers with 3 or more qualifying children.
Yes. For those with 3 or more kids, the maximum EITC will be $8,046 in 2025. That's $216 more than in 2024, which can make a real difference for families who are struggling.
It's great to see that increase. The EITC is a lifeline for so many families.
It is. It plays a huge role in supporting working families and fighting poverty.
Absolutely. Well, we've covered a lot of ground today, from standard deductions and tax brackets to HSAs and the EITC. With all these changes and all the complexities of the tax system, what general advice would you give listeners when it comes to planning for their taxes, both for the coming year and in the long term?
I would say the most important thing is to stay informed. Tax laws are always changing, so make sure you're up to date on anything that could affect you.
Staying informed is key. What else can taxpayers do to be prepared and maybe even lower their tax liability?
Take a look at your current tax situation. See where you stand. Understand your income, your deductions, any credits you might be eligible for. That gives you a clear picture of your tax profile.
Okay, so once you have a handle on your current situation, what are some strategies people can use to potentially lower their tax liability?
Well, one thing to look into is tax-advantaged accounts, like HSAs. Those can really help reduce your overall tax burden.
Yeah, those tax-advantaged accounts. Definitely a smart move. Any other tips for effective tax planning?
I always recommend talking to a professional. A good tax advisor can give you personalized advice, help you find those tax-saving strategies, and navigate the tax code.
Makes sense. Having an expert in your corner can be really valuable, especially with all the ins and outs of tax regulations. Any final thoughts for our listeners when it comes to tax planning?
Don't wait until the last minute. Start early. Give yourself plenty of time to get organized, gather all your documents, explore your options, and file accurately and on time. Procrastinating, well, just leads to stress and mistakes.
Yeah, no one wants that. Starting early, definitely the way to go. Makes the whole process a lot smoother. Well, we've covered a lot of important information today. All those changes coming up for 2024 and 2025. Standard deduction, tax brackets, AMT, HSAs, EITC, all things that can have a big impact on people's finances.
Absolutely. It's crucial to understand these changes so you can make smart decisions about your taxes and your overall financial well-being.
And remember, staying informed is an ongoing process. Tax laws are constantly changing, so you got to keep up with the latest developments.
Right. Check for updates regularly, consult reliable sources, and don't hesitate to get professional advice if you need it.
Before we wrap up, I want to encourage our listeners to think beyond just the mechanics of taxes, the brackets and deductions and all that. Let's consider the bigger picture, the role of taxation in our society.
I agree. Taxes are more than just numbers on a form. They're how we fund the things that matter. Education, healthcare, infrastructure, social safety nets.
Exactly. The way our tax system is structured, the way it's designed and implemented, it reflects our values as a society. It's about finding that balance between individual responsibility and the collective good.
It's a constant balancing act to make sure the system is fair, efficient, and benefits everyone.
So as you're planning for your taxes, think about how those changes affect you personally.
Yeah.
But also how they fit into the bigger picture, our societal contract and the values we all share.
It's an important perspective.
Well said. Well, I think that's a good place to wrap up our discussion on taxes. I hope you found it informative and insightful.
It's been a pleasure.
To our listeners, thank you for joining us. Remember, stay informed, plan wisely, and don't be afraid to seek help from a professional if you need it.
Stay curious, stay engaged, and stay informed.
Goodbye and see you in the next video.